Do you want to clap it?
Yeah, Ian, you clap. You're the guy in the middle.
You're the clap expert.
3, 2, 1.
All right, Chingoose. This is a new one. We're here in our Hippo campus office in San Francisco doing our very first live taping. You know, I think this is only like the third, fourth time that we've actually, as a group, seen each other in person.
We're virtual friends, not real friends.
Exactly. So yes, I am actually this handsome, and you guys are stunning as well. But good to see you, Chingoose. Glad we could do this in person.
Yeah,
I love this.
Thank you for having us, Eric. This beautiful space. I mean, I think it's going to become more beautiful soon too.
Well,
more
you guys have already made it more beautiful. So thanks for.
And I heard this is a co-working space too. You can sign up for.
That's right.
Whatever you want.
Check out the Hippo campus.
That's
here
right.
in SF.
You can go to hippocamp.co to learn more, get a day pass, and come work with us. All right, guys. Let's actually start with Papa Elon. You know, the king of the world, apparently. So. He just had his first earnings report for SpaceX as the very first one for his public company and exceeded expectations. It says, 92% revenue growth is what we're seeing to $7.8 billion for the quarter. That sounds pretty good. Yet, stocks are sliding on after hours, and I think a little bit today too, and the next day. Can we talk a little bit about what's happening here? Kevin, have you been tracking SpaceX and what the movement has been like in the last day or so?
Yeah, I mean, as you can imagine, in the public markets, this has been like a huge topic, right? Everyone kind of the first earnings report for this newly merged and public company, one of the biggest IPOs of the year. And I think there's a lot of skepticism for many different reasons, right? I think on one side, there's a very technical issue, which is that investors are locked up for a very long period of time when they've been investors in this company, when it was a private company. And after an IPO, the first lockup in this particular case is actually right after the IPO. So I think tomorrow is when roughly about 20% of the shares become unlocked for a lot of early private investors. Depending on, there's some categorizations of different private investors as well. So some people are locked up longer. But at least a good portion is actually getting released tomorrow, which is why I think you see a lot of this weakness in the stock. But in addition to that, I think there's always been a little bit of apprehension about how much they're spending on CapEx. So I think even just in this quarter, it was something like $18 billion of like CapEx spend, which is pretty impressive, but also scary. And I think, a lot of public markets investors are looking for profitability and cash flow, and this is certainly not one of those things. So I think there's definitely some things to be a little bit hesitant about, but overall, I think earnings were a beat across all three businesses, across many of the different metrics. And so it's just a little bit, for me, as many people who have exposure to SpaceX on this podcast,
and all three of us do actually.
Yeah, it's like a little bit disappointing because you would hope that this actually starts to trade better.
Yeah. Ian, are you long, short? This is not investment advice, folks.
Not investment advice, but I shorted it before the earnings call. And I lost a lot of money yesterday, but I'm earning it back. But the reason why I shorted, I got some options for this was there's going to be a huge investor lockup expiration. I think I heard it's over $900 million. So there's going to be downward pressure on that stock. And I'm not really, I wrote about this, but I was really not long on SpaceX stocks as a public stock with X. So SpaceX feels like it's more on the X instead of space now. So I don't know. I'm still not sure about this, but yeah.
Ian, do you think that this is a true AI bellwether stock to track? I'm trying to get a sense of whether Anthropic and OpenAI are reading into SpaceX movement as something that can be portentous of how their performance will be. But, when I think about SpaceX, you're kind of making the point that they're more on the X, grokky kind of Twitter side. But I still think of it fundamentally as a rocket ship company and Starlink. Is it truly something that's like a good comp at this point?
I think it's, so the rocket company or the internet company is becoming the foundation of SpaceX in general. And Elon is trying to do whatever he wants on X based on this platform. I think there's a rumor that they might acquire Tesla too. So I don't know. It's a hard stock to figure out because I just think they're two different businesses, X and SpaceX. So, I invest in SpaceX because it's a space company. not an AI company. So I don't have that much confidence in this company anymore.
What do you think the move is going to look like, Kevin, if the Tesla acquisition does take place? We talked about this a little bit. They're
It's going to be
divesting China.
worse.
Is it going to get worse?
It's
You
going to
think
get
so?
worse. Like SpaceX is saving anything that Elon Musk had failed on. Like Tesla's not doing well. Optimus is not going to be there.
You know, I don't know. It's very. I mean, my guess is as good as anyone's
Yeah,
on
of
like
course.
if this all gets merged together.
Not investment advice.
Not investment advice. I actually think one thing that it would simplify the story for investors would be that Elon spends all of his time and energy on this one company, right?
Yeah.
If it's all merged together, there's no questions about where's Elon spending his time? Like, is he distracted? And also there are definitely synergies between these businesses, right? Whether it's like the compute that you're putting into, data centers versus manufacturing capabilities for Tesla, being able to overlap a lot of the factories and capabilities of all these different companies, for sure will have some synergies, but I think the most interesting thing from a public market investing perspective is it does kind of simplify the story a little bit if it's all just under like the X company, right? And it's Elon's thing.
I'll be curious when Neuralink, boring company.
Yeah.
I mean, those are still private companies, right? Right. But is that inevitably where they find their liquidity? Is just this massive SpaceX?
So I think Elon's great at doing things that SpaceX is the crown jewel that was able to save X and Tesla, and we're hoping in 10 years Neuralink will save SpaceX. That's how I say it. I think Neuralink is trading at $60 billion right now, and it's not making a single dollar. And I'm one of the believers of Neuralink. Like, I think that's going to happen at some point, but not within 10 years, after 10 years. But SpaceX is doing well. So I don't know. He has a plan. Boring company, I don't know about that. It's only in Vegas. It's going to take some time. It's not going to be able to go to the cities. The city councils or the Democratic Party is not going to let that happen underground in San Francisco or in New York or LA.
It's also very hard to like dig a huge underground tunnels through like every major city, right? It doesn't, yeah. But I think it's interesting, right? As you mentioned these companies, it's kind of like Elon has caught like a lot of these major trends, like as they came, right? Like EVs and then autonomous vehicles and AI. And then I do agree with Ian too. I think Neuralink, like brain-computer interfaces, is kind of like the next natural evolution of like humanity, like the singularity, right? Where we become one with kind of robots in the future. Like if we get there, I think that is where like the next $1 trillion kind of opportunity is.
All right, guys, a vision came to my mind. This is like sometime in the future. I'm getting into my car. I'm using FSD. I'm going through a tunnel to beat traffic through Boring Company. And then I have my Neuralink on, and my Ani sex companion from Grok is feeding me whatever sexual content or whatever fuel you use this thing for, as I'm on my way to my space flight to Mars, right? So all that makes sense, right? All Elon, all the time with these companies. Maybe that's the future that I don't want. Actually, now I think about it.
This is Eric's secret dream. He's like, this is the future.
Automated porn reports.
I'm sorry, kids. I'm sure someday you're going to catch this episode of Three Commas Podcast.
You're demonetized, man.
All right, guys, let's move on to a different topic altogether. We're going to talk about Google. I have not been following this one at all. Actually, who like it?
It was me.
It was, yeah, you want to introduce the story about Jeff
It's
Dean?
just simple. Yeah. Jeff Dean was at Google for 27 years. He's been one of the, AI guys, AGI guys. And he's leaving. He's actually starting a startup, and Google is backing it up. So it's going to be an interesting journey. The company is called Discovery Loop. Khosla, Radical-led, Google came in as a founding investor too. So Alphabet stock dropped about 5%. And Demis Hassabis is stepped down from the DeepMind CEO. He's going to be the chairman. So he's going to be more the entire Google strategy on AGI stuff, but not the head of DeepMind anymore. So I think both of these was able to pull 5% off the Google stock market price right now.
I mean, does Google have like a long-term problem here? Are they able to attract the very best scientists at this point to compete with like Anthropic or OpenAI?
The market is reacting negatively on this, but I think it might be a positive sign for them too. Like they were number 3 because they had Jeff Dean and current members. So it's a generational change. We'll see how it goes, but they're changing things up so that they can catch up with Anthropic and OpenAI, and I think it's a positive sign.
Yeah, I don't know what levers Google has though at this point to compete. I mean,
it's the data. I think it's the data. Like they have everything.
Yeah,
they have everything on your Google Drive. You have everything on your Google Gmail. Like your search history and everything. You have all the data. So that's why I'm still long on Meta. Like you have a lot of data on Meta too.
You're long on Meta.
Yeah. And Google and OpenAI and Anthropic, they're doing great, but there's something that they cannot catch up in terms of tens of years of, more than 10 years of data that they have.
Fair. Kevin, what's your take on, are you long on Meta too? Is it all eggs in that basket?
No, I buy the index, man.
Yeah, there you go. Yeah.
I listen to Warren Buffett's advice.
What's your VU and VT?
I'm not like, I'm not.
I don't buy individual stocks, but I'm just saying, like
he likes. I think Ian still is bullish on
Meta
the prospects.
Yeah.
I mean, I think I generally am too. Like, I think Meta and Google have a lot of data on us. I think they're both public companies. I think to some extent, I do think that should help with attracting a certain amount of talent, right? Because when I'm joining, if I were an engineer or someone thinking about joining a big tech company, like I do want my compensation, if I'm getting stock, to be liquid at some point. Granted, like OpenAI and Anthropic will probably be public very soon. And a lot of these big late stage private companies, they do employee tenders as well on a regular basis too, right? To provide liquidity. But, I think Google stock and Meta stock has performed very well over the last 10, 20 years. Like, it's hard to say that they won't continue to do well. So I think, they should still be able to attract good talent. I think the other benefit is like you can acquire companies, right?
Yeah.
Like, Meta made the acquisition of Scale AI, and now Alexander Wang is there. And, there's obviously some mixed reports on whether they've been able to do well or not post that integration. But I think with a public stock, you have a currency that allows you to do M&A and buy startups or big, late stage private companies at the right time. Which I hope Google does more of, because I do think it would be helpful to get a little bit of new DNA in and, potentially acquire some new tech and talent. Because I don't think they've been super active recently.
I think you're kind of going where I'm predicting Google's going to go, which is they're probably sitting on a ton of balance sheet. I didn't check the numbers. I'm sure it's huge. And there was this concept when I was working at Meta called the boomerang, which is you leave
and come back,
and then eventually come back, either through being acquired by the company that you started or joined, or just they'll take you back because they just want it. And I think this is going to be the boomerang. Is like their best talent might leave, start a company. It's a fun side quest, and then they sell for a couple $2 billion back to Google and continue what they were doing before. So that's, I think, a huge advantage of these like heavy balance sheet companies right now. And good luck, Jeff Dean. I'm sure you're going to do very, very well. At the very least, get acqui-hired at some point. I want to talk about this next story here. We got two more, so we're going to try to keep it tight for this first in-person Three Commas podcast. So, Travis Kalanick's new company. So, Travis Kalanick, for those who aren't familiar, is quite the legend in Silicon Valley, the founder of Uber. He was ousted, I think, related to the Me Too movement or some sort of mismanagement many years ago, but has since redeemed his reputation. And this last week has been kind of hilarious, guys, because I feel like all these VCs were just nonstop glazing on this guy. Like there are all these like videos and interview clips like all over X about like what a legend he is, and just like even like creating little funny clips of like his like founder truisms. Like kind of bullshit, like, you gotta never give up and like that kind of stuff. And I was like, good Lord, like everyone is just like on their knees, like worshiping this dude for coming back. And he had a really big raise. So I'm seeing $1.7 billion led by A16Z. Let's start with you, Kevin. So why do you think this is so newsworthy? The return of Travis Kalanick here.
Yeah, I mean, I think it's definitely undeniable that he is a very successful entrepreneur and also like someone with a huge personality, right? Like we've seen, there's been movies and TV shows made out of this guy. Like I don't know if you guys watched Super Pumped, but it was like pretty funny. And
Do you recommend?
I recommend it. Yeah, I actually think it was pretty interesting and funny. But like, is no doubt that he's also like been a legendary like operator, right? Like he built Uber, which is, you know, at this point, like hundreds of $billion public company, right?
Yeah.
And I think he's kind of been villainized in a lot of contexts, right? Like there's some Me Too stuff. And so like, I think there's a bit of a dimensionality. Like he's kind of like a 3D character, right? It's not like he's perfect. He has some kind of character flaws and mistakes that he's made. And so I think it's very fascinating to people because you can see all these different elements of the guy and what he's done. And it's not perfect, right? And I also think that there are a lot of like crazy stories of like weird projects that they had within Uber, like secret projects. I heard that at like some point they had a project which was to steal like drivers from Lyft, and they actually called it like Project Shoplift.
Oh my gosh.
Yeah, which is like
Brilliant.
Yeah, and then I think someone said like we can't call this project like we need to change the name of this project.
Yeah,
like we cannot call it this. And so I think it's just like there's a fascination in Silicon Valley with characters that have this kind of unique like founder aspects and are just like willing to kind of break the rules a little bit, right? And have a persona that's like larger than life, like a little bit like the Adam Newmans of the world too. And so, you know, people love a good comeback story, and people like kind of these characters that are just like around Silicon Valley and just legendary in some ways.
I think the thing that's kind of confusing to me about, 100%. I mean, I think the lore of Travis is quite strong. And, you know, all the little discussions in the past, I think that he was accused of seem to have conveniently gone away, I think. And I think he'll probably be enormously successful in whatever he does next. I am curious, though, because he did have a company in between.
Cloud Kitchen.
So anyone know what's happening to that company?
I have no idea what's happening.
This is actually that company.
Oh, it is?
Yeah, they're funding Cloud Kitchen and Pronto. There's another robotics company.
I see.
They're mixing the two up, and this is his new company called Atoms.
So it's going to be like a new holding company that owns the both.
Yes.
Oh, I see. Yeah,
So-
clearly we didn't do our research.
Yeah.
Explain more, Ian.
This company has been around for over 8 years, and they're turning the Cloud Kitchen into a robotics company. What excited me the most about this company was that this is focusing on the specialized industrial robots, not humanoids.
Yeah.
So Andreessen is saying, hey, it's not time for humanoids. They literally said it. We're not ready for humanoids. We're going for the industrial specialized robots first.
Yeah.
So we talked about this last week, and I was like, maybe I'm right because. So, and it's just, but I'm not really happy about this because, again, Andreessen backed up, Adam Newman again. Like he's doing it again here. Even up,
they're going after all the bad
boys, right?
Yeah. Well, I mean, it's
and it's $1.7 billion.
Yeah. Though I will say, Cloud Kitchens, I believe, raised quite a bit of capital before that already. So it's not like this is the first round of financing that they've ever raised, right?
Right. That makes sense.
But these optics make no sense. So like if it's essentially stacking on top of the existing cap table, then it's almost like a artificial reintroduction, I feel like, of Travis again and this company. I mean, it's been reorganized as a new kind of management structure and definitely new brand, but I guess I haven't been able to understand, like, from this conversation, like, why now to do it like this, and why does it matter to have like this clearly coordinated glazing PR thing at this moment for him?
I think it's a little bit like a rebrand of the business, right? Because like if you wanted to keep doing like the Cloud Kitchen thing, he would just raise a new round for Cloud Kitchen, but it seems like he wanted to do this in conjunction with all these big VC funds to basically make a splash and say, hey, I'm back, and we're going to be doing like everything related to like built world, robotics, real estate, like all the hard things that tie in all the current trends that are happening, right? Between AI and built world. So I honestly think like it was probably a concerted like rebranding and marketing effort.
I think it's essentially just Ben saving. Clarkson is not doing well, obviously. So Andreessen is just, helping him out.
Yeah. But I mean, I think also like Andreessen does like the bad boys because they think that these bad boys like be able to, build a multi-billion-dollar business.
That's something that I'm curious about. Like, do you know anybody who was a very successful entrepreneur and did it again and again and again?
Elon?
Elon, Jeff Bezos.
Elon did it at the same time. Jeff Bezos, what? Like Amazon and what else?
Blue or
Is it doing well? No.
Richard Branson.
Elon started SpaceX and Tesla and all these things at the same time. And he's successful now because all of his business has been successful together. I don't know if Neuralink is going to work out. I don't know. It's the repeat founder thing. Works for everybody.
I think that's fair. At the scale of what we're talking about here, like billions of dollars of outcomes, I don't know. There are definitely founders who are great at like $50 million exits.
$50 million exits,
like
M&A, and starting again. That's good.
Yeah.
But like Uber guy starting something new, or Adam Newman starting something new, Elon Musk starting something new. Like, is there anything that just really break out yet?
Well,
I can't think of
if you're sitting on an insane amount of AUM that you are struggling to figure out how to put to work, that sounds like a very safe answer. Is like, let me put $2 billion behind this like celebrity,
exactly,
right? Because I have to deploy $40 billion.
I think that's the game that Andreessen is playing right now, and nobody's going to object it. Like, hey, this guy's an Uber, and we have access to him.
Yeah,
we're helping him out. He's going to do something. He's Travis. Like, I think that's the narrative that they're trying to play out.
That's fair. And then also the LPs like can't blame them. Like, hey, like. He's a legendary founder. It's like giving money to like the Robinhood or Revolut guy. It's like they're going to do fine.
They're going to do fine. They're going to make money.
Well, we're not here to root against anyone. Good luck, Travis, and all the investors on the reborn company here, Adams.
And it's funny. They're going from cloud kitchen to robotics, like the hottest field of all that you can raise a lot of money right now. So it's just. I don't know what the deal mechanics look like. Are they doing the down round, or is this next round, or because the dilution must be really bad? Because if this company has been around over 8 years.
Yeah. Well, if anyone's watching, please send us a cap table if you have access to it. I'd be really interested in seeing like who's getting fucked over as part of this. Maybe no one. Maybe everyone's going to make an insane amount of money, which we always hope for. Speaking of cap tables and. Maybe getting fucked over a little bit. Let's talk about bending spoons, acquiring Airtable for $1.28 billion. First, can either of you guys explain what bending spoons is? Maybe that's a really good starting point. I don't know that much about this company.
It's a garbage collector.
It's a garbage collector?
Yes.
Oh, okay. That's a good business. The mafia loves
That's
it.
a really good business, I think. It's essentially collecting those dead SaaS businesses or software businesses and roll that up and try to become more of a permanent capital to some extent.
Is it like PE or something else?
It's not a PE. It's a company. It's like a Berkshire Hathaway, I think.
Okay.
Yeah. There's actually, I think, a good comparison is a Canadian company called Constellation Software.
Yes.
Which is basically like buying up a bunch of software businesses, making them more efficient.
Yeah. All right. So Constellation Software. Okay. So this seems like a really. I mean, how is this very different from like a Vista Equity though? Still, I still don't get how any of this is very different. I guess there's no intention to sell. You're gonna Berkshire Hathaway.
That's more like it.
Okay.
Yeah, and I don't know. I also don't know if they use a lot of debt to finance their acquisition.
I see.
Yeah, so it's a little bit different from like a PE firm or a PE fund is like a investment fund specifically set up to like buy, and they usually run those companies separately, right? So if they buy like software company A, they're just going to keep running software company A for, in its own way with its own team. Whereas my understanding is with like Constellation and with Bending Spoons, there's like one management team and they kind of run all the different products and business lines within the company.
Very interesting. Okay, so here's like the weird part of it. So $1.28 billion sale. They have raised $1.4 billion Airtable over the years since 2013 when they were founded. They were sitting on, I believe I saw this number, $965 million in cash.
Yeah.
So like, what the fuck is going on here? Like this seems to be like a 1x outcome-ish thing. And like, everyone's going to get destroyed by the preference stack, right? So like, how do you guys make sense of like, how did Airtable go from like $11 billion valuation in 2021 I think that's the peak to where we are today.
I mean, I called it.
You called it?
I mean, we had an opportunity to invest in Airtable in 2021, 2022. We didn't do it because we didn't see anything different from this, anything different from like Excel file or Google Sheets. I mean, it's a fancy way of doing.
I love it.
I mean, it's easy to use, but I don't know how much money you can, how much growth you can get out of it. So I wasn't really sure about it. It's not going to be explosive growth. It's going to be really good, small little tool that you can use like Evernote. But it's not going to be a great business. By the way, Evernote was acquired by Bending Spoons too.
Oh, really?
No way.
These are all garbage collectors. Like we transfer Vimeo, like Eventbrite, AOL, Evernote.
Dude, we should get to know this team and give them our junk company.
By the way, it's an Italian company.
Ooh.
Yeah. I think they're based in Milan, but it's publicly traded. Actually, IPO'd like a month ago.
Oh,
so it's
okay.
a recently new public company.
Interesting. So, like, Kevin, what's your take on the Airtable valuation droppage? Is it just AI effect that's happening now?
I mean,
collapse.
So I don't know the company super well and haven't been following it, but like my guess is, okay, so they had like $900 million of cash on the balance sheet, right? Like that's more than enough money to be running, growth initiatives, different projects, hire more people. So it sounds like the company just kind of gave up. Like the management team just said, hey, or the board members and the management team were like, we could spend this money, like $900 million and like try to like turn things around or grow faster. But maybe like we've tried a bunch of stuff and maybe it just hasn't worked. So let's just give up and like walk away from this and be responsible with the money. Right.
Yeah.
So my guess is that growth was probably not very impressive.
% year-over-year.
Okay.
Yeah. So
it's okay.
It's okay. It's sort of mid.
Yeah, it's like mid. It's definitely not like, let's just say it's not an AI growth story, right? Clearly.
No.
It was probably like profitable or break even, I'm guessing. But like, at some point, I think the Bending Spoons probably came in as like, hey, we can strip out a bunch of costs, we return the cash, and then, we're going to make this like a cash flow machine, right? And that's probably what they're doing with a lot of the other companies they acquire is let's just cut the costs where you don't need it. Like growth is not going to be amazing anyway, and just see how much cash flow we can generate from these companies.
I think it's very similar to private equity to some extent. I think Kevin pointed out, like they just don't have a management company for each company. They just roll up to a one management company. And the other thing is they don't have a time frame to sell.
Yeah.
So they're going to hold it forever, but then they're going to jack up the price so that they can get better EBITDA.
Yeah.
And they can loan again to buy another company.
Very PE-like.
PE-like, but exactly. Similar to PE, but one management team for every company, all the company at the same time, but no selling time horizon.
Pay so much money to Airtable each month too.
You're going to have to pay more now.
Well, okay, let's bring it back to the AI disruption. So I believe the strategy they're talking about makes a lot of sense. And it does seem like one of those things you could vibe code yourself, right? Like you just hook it up to like a really nice backend database. You could probably replicate many of the key features.
Yeah.
There's some things that I think I like more about Airtable than Excel and all that stuff. Like there's some nice sharing features and things like that. But yeah, frankly, this is a good excuse for me to just go back to Claude and be like, can I just do this myself? Like,
Exactly.
Probably. So it'll be an interesting one to milk. By the way, Bending Spoons is at a $23 billion market cap right now. That's a little bit smaller than I was. It's a lot. I'm sorry.
It's an Italian company.
Is that what's punishing it?
It's in the Italian stock market.
It's in the Italian stock market.
Yeah. So the
no, it's in the NASDAQ. It's BSP. Well, maybe they floated some of it into the NASDAQ. I don't know how this.
I don't know how that was, but I just thought it's in Italy. Did they IPO on NASDAQ?
Well, it's also not going to get like a premium multiple if it's
That's
not like
actually
growing
true.
fast, right? Like I assume it's not growing that much.
I doubt it.
Yeah.
It does sound like a really fun company. Like this has always been a dream of mine to do shit like this. And actually, frankly, there are a lot of small cap PE people that do the same thing, right? Just buy these software businesses, doing like a couple million and then whatever. There's just a bigger scale.
I mean, for what it's worth, like I think Bending Spoons has a very good reputation in like Italy, but also like broadly for like making smart acquisitions, being able to like turn the business around and do very well financially.
Okay.
And so I think a lot of people were like applauding them actually for this acquisition. It's like a great deal. at like a super cheap price. But like the VCs that invested in this are like
They're sad.
pretty sad. Yeah.
I mean, that's a pretty damn. I mean, that I don't know if they made the later stage investors definitely didn't make any money on this.
They're
I think
losing
got
money.
crushed by the
They're
preference.
just getting their money back after 5 years, I think.
1x or something maybe.
Yeah.
Right?
And I think this is the only way for the founders to get some of the money out of it.
Yeah, I heard the founders got I think $50 million, which is pretty good, right?
Good
like
exit.
by any means, like $50 million is a lot. Eric's like that's like not a lot of money for him.
Okay, it is a lot of money.
You're not a
And
billionaire, you're nothing.
like, I would gladly take
not-
You don't
but
belong here.
they had to have taken secondaries. I
Yes,
mean, like,
yeah.
they had to have taken. I would be surprised if they didn't take at least like 50 million off the table.
Sure,
Like,
Sure, yeah.
So like, sometimes that's like the way you win, I guess, as a founder, right? It's just like, look, there's gonna be some sort of terminal value. I don't know what it is, but I pulled out my $100 million and then
Let it ride. Let the rest ride.
yeah, let the rest ride. So like, this almost feels like a little employee bonus or something like that.
Yeah. No, I'm sure it's fine. I'm sure they're comfortable. Like, you know.
Yeah.
But it's weird, right? Because at one point, I think the company was worth, was it 11 billion? Or like, I think $11 billion.
Yeah.
So at that price point, like, you know, this was a much, much, much more valuable company.
Okay.
Right.
Okay. Fascinating. And yeah, hats off to Bending Spoons. This is like a hell of a deal that they were
The only problem
negotiating.
I see in this business model is, are they going to be able to keep that company going? Like, it's going to die at some point.
You can milk it though.
You
Right?
can milk it to some extent, and people will leave, and they're going to create their own Airtables going forward. So, is this a really sustainable business? Like Berkshire Hathaway was, I mean, Warren Buffett was doing something that's insurance, something that's going to last. It's not something you can outsource or replace with an AI.
Yeah.
But these are companies that you can actually replace with AI, and they're not going to be able to keep their cash flow going. So that, I mean, if you jack up the price too much at a certain point, people will start to develop their own Airtable or own, what else do they have? Evernote. Meetups, maybe not. StreamYard, Vimeo, Harvest, AOL, Eventbrite. They're going to start.
AOL.
AOL.
Dude, these are legendary brands from the last 10 to 20 years. This is incredible.
Exactly. So I don't know how this is going to be I mean, it looks fun, and it gives you the aura that, hey, Warren Buffett has done this before, and Constellation has done it well.
It's like,
But then Constellation was doing this during the SaaS era, not the AI era.
yeah.
They're very successful when they had these small SaaS companies that can, get it and milk it out and keep the company, customers locked in. But now, I don't know if this is a really good business.
I'm looking up Constellation Software's market cap right now, 66.65 billion Canadian.
Yeah.
So what is that,
That's
like
half of it.
40 billion, 30 billion?
Yeah.
Okay. Yeah, I guess like they're sort of trading at kind of similar levels here. And they are in the Canadian stock market, so I think that's a little bit more punishing. Seems like the perfect Harvard Business School graduate dream, right? To do like things like this. Yeah, software roll-ups, exactly. Like they did like search funds back in the day, and now they're probably all going to just do like roll-ups like this. And I get it. It looks fun.
Market's really unpredictable with AI and everything.
It is. Yeah, it's a serious fucking happening right now across like SaaS. But, we carry on. And we actually do have good SaaS companies even in our portfolio now that are kind of more in the regulatory streams. So if they're like in a very interesting like fintech niche or healthcare niche, like so far so good. We'll see if that holds. But yeah, for something like an Airtable, I wonder, and I might try this weekend, if I go on Fable 5, but I don't have that many tokens, and just say like clone Airtable.
Yes.
And like don't make any mistakes, make it AAA, whatever, great software. I bet V1 will be pretty damn good, is my guess.
I agree.
Yeah. Which, by the way, for anyone who's an aspiring VC, is a really fun test to see a portfolio company is if you put in like, can I clone this software? And it's really easy. That's usually like an indicator of like, maybe this isn't a good idea for us.
Not a defensible product.
Unless like the founder has like an insane community or something like, but like, yeah, if it's just like day zero, like this, I cloned your software, 99% of it over a weekend, then probably going to say no on that one. Listen, guys, those are all the stories for today. And, we were kind of struggling at the end to see if there's any gossip, but
One last question maybe I have.
Okay.
We can talk about this too. Like Robinhood had to list a fund that lets anyone back Y Combinator startups. What do you guys think about this? Like you can
say more. So like,
they're launching a VC fund investing in YC company, and anyone can buy a portion of a share of it on Robinhood
The fund.
of the fund.
Oh, interesting. Is it like a publicly traded?
Yes.
Fund? Oh, yeah. There's been a few of these actually, like people trying to create like publicly traded, basically like private company indexes, right?
Yes.
I think like also Kochu was
Yes.
doing something kind of similar too. I don't know. It's like kind of getting retail interested
But
in.
this is for YC. Before it was like select.
Oh, just anything. Oh,
anything,
okay.
But this is only for YC companies, and they're
Wow.
raising $200 million, and the share price is starting at $25. And I get a lot of questions like, should I buy this stock for my friends who are not VCs? I don't know how you guys think about it. Like,
So these could be already publicly traded companies,
no.
or it would
This
be.
is startups. In startups founded by current and former YC
Okay.
participants.
So there is an
should
active
the startups
selection.
agree to sell their shares.
Then there is an active management component to this. Like
Yes.
someone is saying,
Looks like it.
okay, that's hard.
I know. Robinhood Venture Fund 2. They actually have Fund 1 too.
So this would have to be basically a follow-on check, and then they have to get access
Yeah.
to the company. That sounds really difficult, actually. To
Oh,
get
it's like running a VC fund effectively.
it is running a VC fund.
And they're charging 222. So it is just VC fund.
This is just a VC fund.
Yeah, but it's publicly traded.
Publicly traded. That's the
I mean, it's kind of like ARK Invest, like Kathy Wood's
Yeah.
stuff too.
Yeah.
Like she does the same thing.
She does, except she only gets compensated on the fees. She doesn't get a carry on that.
There's no carry on it. Oh,
Yeah, which is crazy.
that's kind
that's
of
a misalignment.
misalignment of incentives.
Yeah, yeah.
Clearly, yeah.
Yeah, but I actually think the carry is it's good. So yeah, cool. You know, I guess my take is that I'm all for allowing retail people to have more access. This whole like accredited investor bullshit is kind of nuts when you think about it. Like the three of us can go YOLO into like some shit coin, and that's legal. We can gamble everything on Kalshi or Polymarket. That's legal. We can go to casino and drop $100,000 on red, and that's fine too. But you have to be accredited in order to angel invest, right? So. I do think I love access, and I guess my take is that if it works well and they select well, and these people, their retail people can't otherwise get access to these great companies, then sure, why not, right? I wouldn't put 100% of my net worth behind this, but it's a good alt. I feel like, yeah. Do you guys let's to take a poll. Like, do you like it or not, Ian, and then you, Kevin?
I think once this VC or startup investment goes to the retail, that tells you the market has peaked. That's the story I want to tell you. Like once this is open to public, like
100%, I guess.
it's you're at the peak. You're the last one who's gonna pay everybody out of the game.
I mean, in principle, I like the idea of allowing people to do what they want to do with their money, right?
Yeah.
But like, if I'm, this is not investment advice. But like when everyone asks them, when friends or people ask me like, what do you suggest I do with investing my personal money? Like I usually just say like buy the index.
Yeah.
Index,
Always.
100%
Right.
always.
And it's like, because none of us are probably really good stock pickers or private company pick. Well, I mean, that's our jobs, I guess.
That's our job. But,
Like,
yeah.
but even then I'm very humble, and I tell people I try my best, and we have interesting things we can offer and try to get best deals. But like, even professionals, there's always someone who's better than you.
It's just that they cannot diversify as much as we do.
Yeah.
We get diversified access to different companies and all that, and insider information. But the public doesn't get those.
And even then, dude, like if we can select right 5% of the times,
Yeah.
we're like legendary investors.
Exactly.
Right? Like 95% is like at least the floor of failure.
Yes.
We should expect within our portfolios, right? So the power law is crazy and that kind of thing. So
Yeah.
it's a tough
So
game.
like, I don't know. I support allowing retail to get access to what they want to get access to, but when someone asks me like, what do you advise? Like, I usually just say buy the index, or I don't know, invest in just a very like vanilla funds that are well diversified, because you won't go wrong with that, right? Versus trying to like pick and choose and be a stock picker. Like it's just really hard. And there's lots of professionals, well-paid professionals, who don't even do a good job.
Yeah. I think it's hard because you can let people do whatever they want, but you're not letting people do casino anywhere like on the street, or you're not going to let them do the drugs, whatever they want. There's a subtle limit. Like we got to protect the consumer. But we gotta protect the consumers if they're not informed. You know,
What do you mean casino? Anyone can go to a casino
Like
if you're above 21.
Yeah, exactly.
I mean, you can't do it in San Francisco downtown.
A casino? Oh, you're saying you can't in casino? Yeah. But if you go like in San Jose and
Those kind of
all
stuff.
that
But
stuff.
There's I mean, you cannot do, I guess, sports betting in San Francisco.
yeah, maybe. Yeah.
You cannot do like
Actually, no, you can with Polymarket and Kalshi now.
exactly.
Yeah, exactly.
That's what I think is wrong. Like we gotta shut that down.
Actually, I want to like end this with one disturbing thing I'm noticing. So I have young kids, an 8-year-old and an 11-year-old. So the 11-year-old is entering middle school right now. That generation has like zero patience when it comes to like long-term compounding with index funds. So this entire summer, I worked my son through a 36-part reading course on like indexing. Like this is actually how you're going to build most of your wealth. You got to do it like slowly and just like give it time, just keep at it. Even a couple bucks a month is fine. It works. And what he's been sort of teaching me, he's like, everyone in his class is chomping at the bit to see how they can get into Kalshi. Like whether they have a cousin or even like a parent or uncle who will be willing to do prop bets for them. And I'm like, this is so bad, right? And pairing that also with like the younger people in Korean, the 3.2% or something that got margin called. I think that was also like this impatience thing of just like, we can get our money right now, get our bag right now. So I actually feel like definitely a generational aligned old guy right now. Of like,
Well, it's also the fact in Korea, it's like the social mobility is just not there.
it's not there. Yeah, we talked about this. Yeah.
So like, you know, the only way that people feel they can get themselves out of whatever social class they're at right now is just like go to the casino, go to the stock market and gamble, basically.
There's gotta be index funds in Korea though, right? Is there like
There's an index fund, yeah.
Well, not Kospi.
yeah, is there
But that was like,
it's Bitcoin.
yeah.
okay.
Like
That was the problem. That's what killed the Leopold guy, the Cosby.
Yeah.
Heinix and stuff.
The Koreans did it.
Koreans did it. We made it. And Kalsi's at a lawsuit with Minnesota,
Yeah, they are.
Utah, and all these different states. And I think we got to shut that down. It just doesn't make sense to me. And I agree with the like patience and long term, stuff for the kids. And I think the problem is this is part of a cycle. Like we all have these people running into this stock market at some point, running to buy real estate at some point, and look what happened. Like there's always bubble bursting after crazy market in terms of stocks, .com bubble, and then subprime mortgage when everybody was buying houses, like 3 or 4 houses. So, and then once it happens, people realize, hey, this is not worth it, and they just don't do stocks or real estate for a while, and it just comes back after a while. And that's what Koreans do too. Like my mom and my parents always told me, like stocks are gambling. Do not ever invest in stocks. Because that's right after this IMF and all this crazy stuff.
They do realize you're a venture capitalist, right?
I know. This is not what I do. Like, they're really scared about my job and that kind of stuff. Are you like a fraud? Are you a fraud or kind of stuff?
I mean, we're always running that border.
They just don't know what
touching a little bit. Yeah.
But then that's the cycle. My parents never did any stocks, and they're doing it now, which is a bad signal.
Yeah.
And once you lose everything with this market crash, and you're not going to do it for 3 to 5 years, and you start doing it again. So I don't know. That's the cycle.
It's okay, Ian. Your DPI is going to be great. You'll take care of everyone in the family. I'm not worried about you. Guys, we covered a lot of fun stuff, as well as maybe parenting advice for me a little bit. Okay, so Kevin's your turn to do the sign off. Okay.
Yeah. All right. So again, this is the 3 commas where we talk like we have 3 commas, but we don't. We're just unhinged personalities. So with that, nothing that we talk about is investment advice.
Look at that.
Please consult a financial professional, and we'll see you hopefully again in person for another live recording soon. But see you all, Chingus.
I like it. I like it better in
So much more fun.
Yeah, so much more fun.